Welcome to Spiedel's Federal Tax Minute. I'm your host, Catherine Sedan. This week, we're covering some recent updates regarding Social Security benefits. Spiedel's post-tax season update and review webinar covers answers to all the questions that come up during tax season, like upcoming tax legislation, expiring TCJA provisions, and maximizing disaster tax benefits. Get registered at one of 4 dates in May at spiedel.com under webinars. Recently, there have been a number of updates from the Social Security Administration regarding benefit payments, debt collections, and overpayments. The Social Security Fairness Act of 2023 eliminates 2 Social Security provisions that reduced the amount of Social Security benefits paid to over 2.5 million recipients, retroactive to January 1st, 2024. Prior to being repealed, the windfall elimination provision and the government offset provision reduced the amount of Social Security benefits paid to government workers and the spousal and survivor Social Security benefits paid to families with retired government workers. Starting February 25, 2025, the Social Security Administration began paying retroactive benefits and is increasing monthly benefit payments to people whose benefits have been affected by the windfall elimination and the government offset provisions. Most affected beneficiaries will begin receiving their new monthly benefit amount in April 2025 for their March 2025 benefit. Public pension recipients who are not receiving Social Security benefits because of the windfall elimination and the government offset provisions can and should apply for Social Security benefits as soon as possible. The increased benefits will come with the need for planning advice for taxpayers. For many taxpayers, the increased benefits may result in estimated tax underpayments, especially as a result of lump sum retroactive payments. Tax professionals may want to review the Social Security recipient's income to see if any withholding adjustments should be made on these benefits. And the increased benefit amounts may result in an increased amount of the Social Security benefits being subject to tax. This should be factored in when determining the amount of estimated tax payments going forward. The Social Security Administration announced that it will immediately restart collection activities through the Treasury Offset Program for debts accrued prior to March 2020. Collections were suspended during the COVID-19 pandemic. The Treasury Offset Program is a centralized program designed to collect delinquent debts owed to federal and state agencies by intercepting federal and state payments. Starting in March 2024, the Social Security Administration was no longer intercepting 100% of an individual's monthly benefit if the individual failed to respond to an overpayment notice. Instead, they applied a default withholding rate of 10% of monthly benefits. However, this past March, the SSA announced that it will return the default overpayment withholding rate for Social Security beneficiaries to 100% of a person's monthly benefit. The SSA began mailing notices about the new 100% withholding rate in late March 2025. The withholding rate change applies to new overpayments related to Social Security benefits. The withholding rate for current beneficiaries with an overpayment before March 27, 2025 will not change, and no action is required. The withholding rate for supplemental security income overpayments remains at 10%. We cover breaking federal tax news in Spiedel's Federal Tax Letter, a monthly publication written by tax professionals for tax professionals. For details on a subscription, go to spiedel.com and click Publications. That's all for this week. Join us next time for another episode of Spiedel's Federal Tax Minute.